Hello guys, this is Tom from Finate and welcome to another recap. This is the recap of yesterday's session, the 13th, and I will take a slightly different approach today and I will disseminate one of the trades I took. I took 4 trades, 2 longs, 2 shorts, ended up in slightly negative, but overall it was really challenging and I learned some things along the way, so yeah, I cannot complain. And I will discuss trade in SABR, and I will give you 3 things that in hindsight I overlooked, and you can take advantage of my mistakes. So SABR, let's look at 30 minutes here. It was a stock that gapped significantly down and was attacking the support level at 572. So I switched to my intraday 2-minute interval and I started looking for a setup, and my setup was formed right around here at 1540 when the market formed a flat bottom, and you could see in the order flow that it was really attacking the 560 area. Given the 560 was underneath my support level for the day, I took this as a positive sign and I placed my order at 559. I placed a stop limit order and gave it few cents of leeway. So for example, if it dropped straight down to 550, that would have been too low of a price for me, so I just gave it I believe 4 cents or so. So I entered, was filled at 559, and my stop loss was at 79. I could have gone with a slightly lower stop loss, let's say 574, and my profit target would have been smaller, but it turned out that it was a good idea to give it a little more room, as the market several times attacked 575. So the market pulled because let's take a look up here where we have the S&P. S&P was trending lower, and the SABR just got stuck. It was flat, so I was thinking, okay, so it's after this big of a drop, it's reasonable to expect some kind of a pause, but as long as the trend in the overall market is down, I'm on the safe side. So again, this is the orange line. You see the exponential moving average with 21 periods. So typically market after big drop will need to pull again to this moving average, either through price. So in this situation the market would have bounced back, or as it played out, it just needed some time. So after it pulled, after it pulled to the MA, it dropped down again, but didn't quite make it past the 520. My target was 519. Many of you will now be screaming, okay, why didn't you take it? It was like a couple of cents from your target. Given the minor range of the price, even few cents can make a huge difference. So if I took it over there at 34, for example, this is 15 cents, and keep it in remember that my stop loss was 20 cents, so I would be giving almost 1% of my profits away. So with the market still pushing down, because you can only you could only tell the reversal point when it crossed above the EMA and took out this swing. So with the S&P still declining, there was no reason to get rid of the target. Then, of course, as it reversed, I should have taken this opportunity to exit the trade at somewhere around break even, perhaps a little bit of profit. This is one of the three things that in retrospect I could have gone better. So yeah, in the end it was a loss, and I should have paid more attention to the S&P reversal. Second thing, after this much of initial range, I was maybe a little bit too hopeful in my profit target settings, because this is not like a huge moving stock, so you can tell the average price range is just around just under really $1, so my target was definitely very optimistic. And the third one, which not many people actually talk about, I think, is the pre-market. In trading view, this is marked as extended hours, and I think this is one of the single best reasons to upgrade your package, because you could have seen really nice triangle, although usually stocks are very less liquid in the pre and post market, and especially when you take something like SABR, which is not bad in terms of volume overall, but the pre-market volume was really terrible. But nevertheless, it formed a really nice triangle. So actually my entry point should have been just around there. Let's say wait for a break of 6, the whole number, and good to go. So I was actually like 40 cents late in my entry, and this was because I forgot to check the pre-market. So really nice feature. Most of the time you will see a chaos, but from time to time you can really find a nice setup that will just work straight out of the open. So hope you guys enjoyed this little bit different approach in my recap, and I will catch you after today's session. Bye.